everybody. This is Toni Turner, and welcome to the Market Now as of Monday, February 27th at about 12:45 p.m. Eastern. I was unable to do this past Friday's Market Now as usual, and I wanted to have you one to start the week. So let's go ahead and look at the market together. U.S. stocks are mostly higher than they closed on this past Friday so far today, although they're coming in a little bit this afternoon. Investors are starting to buy beaten down shares after the main benchmarks suffered their worst weekly sell-off last week on worries about tighter monetary policies. The mood lifted today a bit as U.S. Treasury yields slipped, lifting rate-sensitive growth stocks like Apple and Amazon more than 1%. So now let's go on to three charts, I should say, that could give us an insight into the week to come. As we usually do, we're going to start with our daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $398.49, right around $39.84 on the S&P 500 itself. The SPY is trading 13% above. Look at this low here, our October low. The October low, as you know, is when the SPY gapped down, almost everything gapped down on the morning of that October low, gapped down, and the SPY gapped down to $348 and then started moving higher. Right now, the SPY again is trading 13% above those lows. To be really bullish, the market needs to be trading 20% above the recent lows. But anyway, we're at 13%. From those October lows, the benchmark started climbing, and as you know, it moved in an uptrend here, up above the red line, the 20-day moving average, which was good news. Then above the green line, the 50-day, then the 20-day, moved above the 50-day, which is always a slightly bullish thing to see. Then the market went up, and it went up to a quick double top at $410 up here in November and December. We've talked about this before, but I thought you might want to have a real quick lesson here on how to see what the measured move could be. We call it when you get a double top of some sort. Now, double tops can be much wider. I mean, the one high could be back here in October, and the next high could be in December. Of course, you'll see double tops on intraday charts. You'll see them on weekly and monthly charts. Double tops are usually a top reversal pattern, and that's why we kind of want to know about them. So when you see price move up like it did here in November, it moved up to 410 on the SPY, then backed off. The bull said, okay, we're not buying it any higher here. We're a little worried. We could see a trend line coming up here. And so it hit the top, that trend line. And the bear said, yeah, we agree. We're going to sell it short. So it came back down to price support here. Came back down to price support. So went up to 410, came down to price support, then moved back up to 410 again in December right here. That's two tops, but then started moving down again. Now, what is interesting is it moved back down here. Let's see, I've got my numbers here to 392. This is where the support line formed, more or less, give or take a few cents at 392. So how do you know when it breaks? On this day, it broke this support line that we see. It broke down lower, so we say, oh, a double top may be coming here. How do you know where this double top break might end up price-wise? And what do you do? Well, this is what you do. You subtract this number here, down here, which was 392. You subtract it. That's the support line. You subtract it from 410, which turned out to be the highs of both of these candles. What you get when you subtract 392 from 410 is you get 18 points. Then, or dollars if you want to call it that. Then you subtract that 18 from this support line here of 392, and you say, well, if we do that, we get the total, if we subtract it, is 374. So you can say to yourself, if the measured move goes to where it might probably go to, it will go to 300, somewhere around 374. Really? Okay, so price went down right there. Guess what the low of this day was, the lowest of this consolidation? 375. We'll give it a point, right? So that's how you know where measured move, we call it a measured move, and that is how you calculate it. And you can do that for a double top. You can do it for a head and shoulders by using, if you see a head and shoulders form when it breaks the neckline, if it falls down to break it, you simply subtract the neckline number from the top of the head, we'll call it number, and that way you can figure out where the measured move may go. Okay, just a really quick trading lesson for you right there. All right, so, and is that number right here written in stone? Of course not, nothing in the market is, but at least it gives you somewhat of a guideline. All right, so now let's keep going. So that in December, we know the SPY moved down here to 374, 375, then started back up, came up here real quick to the to 418 on February 2nd. So it moved up in January, that's a good thing. Came up to 418 on February 2nd, and that's the highest price we've seen since February 2nd. It's kind of consolidated from there, moved down, broke that little triangle, moved back down here to the 200-day moving average on this past Friday. That's coming in at $393. It bounced up a little today, as I told you. It's down on the day, but up from Friday, which sounds confusing. Don't worry about it. What we want to see in the coming week, we do, of course, if we want to stay bullish here, we want to see the SPY remain above its 50-day moving average, which is coming in at 396.78. Call it 397, 396. And we have the 200-day moving average coming in here at 393. So right here, we want this zone. We want, if we want to remain bullish, we want the SPY to at least stay above. There's price support here and moving average support. So 393 to 396. Fingers crossed it doesn't break those lines. Moving on to our next chart, we are looking at a daily chart of the Invesco QQQ, symbol QQQ. The Qs represent the top 100 non-financial companies by market capitalization in the Nasdaq. We're talking here about Apple, Amazon, Microsoft, Alphabet, Tesla, Netflix, that whole group, as long as they're non-financial. So when I captured this chart today, the QQQ was trading at $294.69. It's about 16% above its October 13 lows, which are right down here at $254.26. Now, there's a lot of big momentum stocks in the QQQ. It's going to get hit harder when interest rates go higher because, as we said earlier, momentum stocks get affected more negatively by interest rate hikes than do, say, utilities or cyclical stocks. These are non-cyclicals. So it came down here, as I said. It's trading about 16% right now above the October lows. So it'd be better if it was 20%, but we can't really argue with it. So it tried to rally from these lows. It went back up right under the 50-day moving average and then fell right back down. The sellers said, you know what, I've been here before, it's not happening. So what did we get here? Well, we got a little double bottom, came down here, then it came back up in November, started consolidating here as the market tried to figure out what to do with it through December. Now, this double bottom is a bottom reversal pattern. It typically makes a pattern like a W. You see the W here? then a good double bottom will typically, from the W, start making a consolidation pattern like this one did, and you say, oh good, this could play out. You can measure it the same way, only you're headed in the opposite direction. It could break out here to the upside. But when you see this high made right here, this gap up, and then it's sold off, and price not only sells off, but it moves down below the support line and below the 50-day moving average, which is a pretty tough dude when it wants to be, then you know that the double bottom pattern is not playing out. In fact, it's failing. So that's a good place to jump out if you're long. Anyway, price came back down in, but still it stayed at this 260 line. Buyers came in at 260 like they did back in November, and that's a good thing. See these support lines? It's important to be able to see support and resistance at least a little bit, because it can give you a lot of guidance as you're trading and investing. So 260 is a support line here. We've talked about it before as a long time support. Then in January, the QQQ started up again, moved through the 20-day, the red line, the green line, the 50-day, 20-day cross. That's a good thing. Moved up in a pretty steep here rally, which is a good thing. But then, then we talked about, oh my gosh, the RSI here is getting really overbought, and every time the RSI, the 14-day RSI, pokes its line above this 70 line, within a few days, usually some weakness will come into the market. Well, there's the line right there, or the point we talked about. Here's what the QQQ did. It bounced up here to the highs on February 2nd at $313.68. We said, oh my gosh, the RSI is overbought, and so as we kind of knew, it started falling down, not terribly, but certainly fell down to this past Friday, where it fell down to the 200-day moving average at $290. Bounced up a little bit today, but as I put on Twitter, it really doesn't know whether it wants to fish or cut bait today, which way it's going to go. We do have high volume coming in, so something's going on, but price is just kind of going sideways. So resistance up here is at 309. We have resistance, of course, up at 313.14 up here at this high. What we want it to do, just like we want the SPY to do, we want the QQQs to remain bullish. Please stay above the 200-day moving average, coming in at $290. And if that doesn't work, please stay above $285, where the 50-day moving average is coming in. So those are very important points for the Qs as we head into this week and continue. Our final chart for today is a daily chart of the Energy Select Sector Spider ETF. The XLE is the symbol. The Spider ETF, the XLE, has 23 holdings, including Exxon, Chevron, Schlumberger, Marathon, EOG, and Occidental Holdings. When I captured this chart today, the XLE was trading at $85.17. Now, just to give you some history, you can't see it on this chart. The XLE made its all-time high in June of 2014 at $98.50. That's just some information. It made a more recent high in November of 2022. Of course, that was last year, at $94.71. It made that high right there. Then it made a lower high down here in January 26th at about $93. So we do have this coming down here. We know energy's been going down recently. Now, before I go on, as I said earlier in this session, the market is trying to make up its mind right now. And as far as ETFs go, I looked at way over 100 or 200 of them this morning. It was going down my watch list. And as a group, ETFs are echoing the broad market's mood of uncertainty. Most of them are saying, well, we have no clue here. I mean, I'm not saying, wow, what a great entry. So of course, tomorrow may be a different story. But however, I am looking at the XLE as a potential position, depending on how it acts in the next couple of days. This would be a very low-risk trade. I would start with a very, very small position, and I would use a hard stop on this trade, meaning I would place my stop with my broker so that I don't try to talk myself out of it if the XLE, if I'm in it and it goes lower. So in the next couple of days, if the XLE, and right now it's trading at $85.17, just above the 200-day moving average, just beneath the 20 and 50-day moving average, which will probably act as some resistance when it starts up. So I'm going to, again, make it a very small position with a tight stop. So it's sitting right on the 200-day moving average again, which is coming in, the 200 days coming in at $82.68. If it can stay above the 200-day moving average in the next couple of days, I will add a very small position to my trading portfolio of the XLE with my hard stop placed at $82.25. If and when the XLE rises, if it pushes through and it rises above this high, and I'm going to call this 91, where I will add to my position, that is where I will add to it, and of course by then I will have a trailing stop. So you may want to keep an eye on the XLE this week. By the way, Occidental Petroleum reports earnings tonight after the bell, and as I said earlier, it is a holding of the XLE, so that could affect the ETF's movement tomorrow morning after the bell. Keep an eye on that. Now, if you'd like to become a more successful trader, this is the perfect time as the market's wandering around. It's a good time to take some time to check out my trader training programs. You can choose from 10 different online trainings, like our popular flagship product, 7 Steps to Successful Trading. You're also going to find easy-to-learn strategies in my swing trading program. Trade the Trend to Profits is fantastic. For beginners or novices, How to Read Charts is great. 3 Winning Setups is perfect for short-term traders. And as we've said for a while, the one on Bottom Fish Like a Pro is really, really good knowledge to have right now. So start the new year by learning how to elevate your trading skill set and increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.